Good evening. This is your India First Market Analysis for Wednesday, 7th January 2026, based on the most recent fully closed market session on Tuesday, 6th January 2026. On that session, the Nifty 50 closed at 26,175.60, down modestly about 75 points or 0.28% from the prior close. Similarly, the BSE Sensex ended near 85,063, down 376 points or 0.44%. This price action reflects profit-taking rather than broad-based panic, as indices remain structurally above recent consolidation lows. For tomorrow's session, bullish agenda, confirmation, requires sustained acceptance above recent intraday resistances. Bearish invalidation only triggers if early trade decisively breaks below major swing supports. And as always, the first 15 minutes tomorrow decide direction. This early period is where confirmation replaces anticipation. But before we unpack domestic structure, let's set the global context, which still frames risk appetite and opening bias. Global market overview, why it matters for India. Global markets have shown mixed signals. US equities have not broken down, but neither are they in a strong upward trajectory, indicating neutral to cautious risk sentiment. European markets are comparatively stable, with investors showing selective rotation rather than aggressive herding. Asian markets remain mixed, with some indices holding gains while others lag. This combination matters for India because foreign institutional investors, FIIs, often base allocation decisions on US yield direction and global risk cues. Currency and bond dynamics shift with global risk preferences, impacting corporate cost structures and valuations. Risk appetite spillover into India is highest when global momentum aligns with domestic liquidity. Here, global markets are neither risk on nor risk off, they are pacing cautiously, which often leads to range-driven sessions in India unless a breakout trigger appears. Indian market overview. Domestically, the market's latest session reflects a healthy consolidation phase after a period of strength. Despite minor weakness in the headline indices, there was no cascade selling. The sell-off was orderly and selective. Breadth was mixed, not overwhelmingly negative. This behavior implies the market is digesting previous gains rather than starting a fresh downtrend. Technically, such sideways pressure after strong rallies is typical of markets that are testing equilibrium between supply and demand, and this balance influences option premiums, writer behavior, and buyer confidence. Sector performance, with stock examples and reasons. Auto sector, relative strength. Stocks like Maruti Suzuki, Tata Motors, and Mahindra continued to display better relative strength compared to the broader index. Why this matters? Autos are often proxies for consumer demand. When autos outperform during market pauses, it reflects confidence in underlying economic resilience and discretionary spending, which supports broader cyclicals even if headline momentum softens. Banking and financials, mixed but important. Stocks such as HDFC Bank and ICICI Bank were stable, while some PSU bank names saw profit booking. Why this matters? Bank Nifty's strength or weakness tends to lead financial sentiment. When private bank leaders hold up, it suggests institutional confidence in credit growth and risk asset pricing. IT and FMCG, rotation, not sell-off. IT names, like Infosys, TCS, and consumer defensives lagged, but this was rotation, not capitulation. Why this matters? Defensive underperformance near highs often indicates that participants are willing to take risk selectively, not exit all positions. Energy and materials, stocks in focus. Names such as Reliance Industries faced selling pressure, which was visible in their weaker performance relative to the index. Why this matters? Heavyweights like Reliance carry meaningful Nifty weight. Underperformance here can cap index gains, even if sectors like autos are strong. Top gainers and losers, with context. Top gainers. NTPC, modest outperformance despite market weakness. Select regional banking names showing relative strength. Mid-cap cyclicals that held up better than peers. Interpretation. Stocks holding up while the market weakens often indicate internal demand absorption, not indiscriminate selling. Top losers. Reliance Industries, underperformed amid broader market hiccups. Discretionary names with recent updates, example Trent. Defensive laggards due to rotation. These losses were not panic-driven but position adjustments, which is a normal occurrence near market highs. FII-DII activity, behavioral summary. Domestic institutions, DIIs, acted as buyers on dips, absorbing supply. Foreign institutions, FIIs, remained neutral to slightly cautious, aligning with global risk behavior. This interplay reflects measured participation, not panic or distribution. Technical analysis, Nifty and BankNifty. Nifty. Nifty remains structurally bullish, albeit temporarily paused. A break above recent high zones, confirmed by sustained acceptance, would revalidate the uptrend. BankNifty. BankNifty hovered near key psychological levels without severe breakdown, which suggests no acceleration of supply dominance. This reinforces the idea that the market is consolidating its gains rather than reversing them. Nifty options analysis. Call writers are active around resistance zones, indicating hesitation to allow runaway upside. Put writers are defending key support regions, suggesting limited commitment to bearish positions. In the current range, buyers bleed quietly. Writers manage risk dynamically. Once price breaks out or breaks down with confirmation, options behavior will follow, not lead. BankNifty options analysis. Call writers show discomfort beyond resistance. Put writers defend the downside. This creates a pressure zone around balance prices, where the first clean breach defines early control. Market psychology. Right now, confidence, fear. Caution, conviction. This is the phase where disciplined observation matters more than positional aggression. The market is neither topping sharply nor reversing aggressively, it is digesting and checking quality. Important news and drivers. Key drivers in play. Global risk tone leaning cautious. Domestic rotation without broad selling. Headlines around select stock performances influencing specific weights. These drivers can cause range tightening or widening, but not necessarily directional acceleration. Tomorrow's market outlook. Framework for tomorrow. Acceptance above resistance range expansion. Rejection near high straps. Inside range volatility compression and decay. Let price confirm, not assume. Watchlist for tomorrow, educational plus names plus reasons. This is not trade recommendations, it's a market reading list to observe participation and leadership. Auto, relative strength indicators. Maruti Suzuki consumption demand proxy. Tata Motors risk appetite via global plus domestic cues. Mahindra and Mahindra rural plus SUV sector sentiment. Reason to watch, autos leading during pauses suggest sustained internal strength. Banking, index crowd leaders. HDFC Bank benchmark for broader financials. ICICI Bank institutional favorite with consistent flows. Axis Bank sensitive to FII DII shifts. Reason to watch, stability or weakness here often signals broader bank nifty behavior. Energy and materials, weighted impact. Reliance Industries large index weight and macro read. ONGC energy demand gauge. Gale Materials energy sector sentiment. Reason to watch, these stocks influence headline traction because of their size and sector relevance. Realty, risk appetite thermometer. DLF. Lodha Group. Reason to watch, Realty strength often coincides with broader risk willingness. Mini educational insert. At higher index levels, acceptance is equal to continuation. Rejection is equal to consolidation or trap. Look for shallow pullbacks. Leaders holding relative strength. Volume confirmations in direction breaks. This is how you read markets instead of guessing them. To summarize today's context. Trend is intact. Price is digesting. Confirmation is required before expansion. Let markets confirm before you commit emotionally. Preparation beats prediction every single day.